Good morning. Thank you for joining us today. I want to introduce everyone to Vance Blew with Guaranteed Rate Affinity. So I would love to kind of just go through a background, try to get some insights into who you are. And as this being basically the intro episode, so as we continue to build on this, kind of gives a background of your experience, your insights, and how we get to where we are. So please tell us about your background. You mentioned that you're from Chicago.
Right. I grew up in Chicago, in the suburbs. Grew up in Schaumburg. Went to high school out there in Palatine, and then moved into the city of Chicago. Right as I was going to college. So went to the University of Illinois at Chicago, the downtown campus there for a little while, and then let me go on. Bellagio. I moved to California after working for a company in Chicago for a while. They transferred me to San Jose. Worked there for quite a few years in IT and changed companies once while I was out there. And then moved to Atlanta in 98, and I've been here ever since.
Yeah, when we spoke, you mentioned something I thought was always relevant to point out is what the market was like when you were living over there in California versus when you moved to Atlanta. Can you tell us about what the property difference was like and what the contrast was?
Yeah. Yeah. Even back in 1998, the property was looking at doing 300, 400,000 for a condo. And then moved to Atlanta, bought a house for like 120,000. There was a new construction. It's crazy. So much difference in the cost, even back then.
Think nothing much has changed in that regard as far as the disparity between the LA and the Atlanta space. It
Right.
feels like still. So that's a common theme we're going to be speaking on, I feel like, going forward in a lot of these conversations. And now you
Right.
mentioned moving back to Atlanta, you're working in IT. Can you give us some insight into what your IT background is like?
Yeah. So I went to school in Chicago for IT, programming and operations, started working out, setting up local area networks, general IT stuff. Um, we were building computers back then. So putting all the components together to have computers, and then gradually grew and trained because we were working on DOS and text-based computers back in the beginning, and then Windows came into play. Learned a whole lot about that. Project management, systems management, deploying systems. Then after I moved to Atlanta, worked on a project in Sao Paulo, Brazil for building a factory down there for the company I was working for. Yeah, so laid out everything that needed to be spec'd, worked with the general contractors, getting that all in place so that the factory floor was set, the office was set for what we needed for the IT, even the phone system down there. Got that all in place for them. That project took a while. I was down there for 3 months the first stint, and then went every 2 months for about a week throughout that first year. That project.
Basically, you're kind of getting some IT and some project management experience, trying to get
Right.
your feet wet, just understanding how to be able to do global projects like these. Obviously, you know how much of an impact that will play in the future. But as life goes on, you kind of just pick up these different skills and abilities, maybe even learning Portuguese along the way.
Yeah, right. Exactly. That was an interesting thing with being in Brazil is very few people spoke English, so had to learn Portuguese to get around. Yeah.
You mentioned that just because you previously spoken French, there was a bit of an overlap as you were
Right.
trying to communicate then.
Right. And I joked that they would tease me. I'd speak Portuguese with a French accent, or I'd mix up the words. I'd say the French word instead of the Portuguese word.
Like I said, it's Latin based, so
They understood me. It was just they would laugh at me.
they enjoy just the
Yeah.
Of course, as you kind of moved on from there, you mentioned, like I said, you're picking up some of the project management experience, and you then took that on. You're able to use that for your own personal projects. So can you
Right.
talk about that? What was that like? How did you come about putting that project together?
So the project of the so right around the year 2000, we had a house in Roswell. My partner and I looked at what we wanted to do with that, and we bought a steel frame distributorship for a company that did steel frame housing in the Atlanta market. And at that point in time, there wasn't a lot of steel frame construction going on. So we designed the house, the engineers designed it, they formed a company to general contract that, built that. We added 4,400 square feet. It was the first steel frame residential construction in the city of Roswell. So worked very closely with the city, project managed that, actually worked physically on the project, building that with the crew that we had. That was an interesting project. The unfortunate part about that was steel increased 100% in cost in the year that that project went on. So what was competitive to wood, a little on the higher end, was totally not competitive at all in construction at the end of that project. That business kind of went uh, by the wayside. I saved money by owning the distributorship and building it that way. All right.
You mentioned you accepted that, yes, because of the increase in price for steel, you weren't able to take it beyond just using it for your personal project. You realized the dream of using it as like a spec for then
Right.
continue business fell to the wayside, and then yeah, continue from there, please.
Right. So I looked around what I could do if I wanted to go back into IT uh, from that, and it would have taken like a year worth of schools to get something specialized because technology had gotten so very specialized by 2002 that. And so I looked around and I saw what my friends in real estate, the realtors, were doing. And I said, I like real estate. I like numbers. I don't like what they're doing specifically. Mortgage makes sense. So I got into the mortgage business right around 2002. And it's been an interesting ride ever since that, being in the mortgage business. Constantly learning, growing um, in that field endeavor. It's been
Yeah, I think that's one constant between IT, the real estate, and on the mortgage side as well. You have consistently have to stay on top of the market, being able to manage what the differences could be, whether it's economical factors and how they impact it, or it's just a case by case basis of what the seasonality is that you're experiencing. So you know that this is going to make a change and this is going to affect how you do business. Similar with the project, how you mentioned, once there's an upturn in the price of one particular item, all of a sudden manufacturing, everything else starts to take a little dip for better or for worse, depending on how that impacts your industry or impacts your project. I wanted to touch on a project. Can you tell us about what's the work you put into it? You mentioned going back and forth or working closely with the city council. What was that
right.
experience like when you were speaking with them or working with them on the project?
So the existing structure we started with was we had to get a survey done, plot out what we wanted to do, and because the property fell like 4 inches over a specific setback line, we had to go in front of the planning commission to get approval for them to allow us to do the buildings. Going through that whole process, this took a couple of months. Had these gigantic signs up in the yard, so all the neighbors came out, wanted to see what was going on. And I had an interesting discussion with that. And the way the design was, it was kind of a V shape. We had to actually modify it a little bit to keep everything within that setback that the city had done. And it all worked out fine. It just was a process to go through. And to anybody that I work with now that's doing any kind of renovation, I like I've got the experience to go with that to help guide through that process.
All right, so you're able to explain the impact of city ordinances, know exactly the approval process is necessary, so you know before you even get started, make sure you have this in front of your
Right.
mind. This could be
Or
one of the biggest things before you even lay the foundation.
right. That, or make sure you're working with contractors that have been through that process as well, depending on what you're doing.
You want experienced people, experienced pros who know exactly what those setbacks could be before you face them, or a
Right.
neighbor that you have to be wary of. At least you understand what those restrictions can be in that space as well.
Exactly. Exactly.
And then for you working as a GC or forming a GC company to manage this process, what was that like? And I want to say, what are some of those challenges you faced? You mentioned being very hands-on with the process. So other people
Right.
you're working with through this?
Yeah, just dealing with the people on the crew, getting all the materials in the right time that we needed them. Um, we had uh, a lot of it was just on the ground building steel frame constructions. I make it like an erector set that kids play with, but you put those things together, they have a specific plan. And then because you build the walls first and then you put the roof structure on and had to rent it's called the lull. It's kind of like a forklift. It's a little different. that had to get in there to help raise that stuff two stories in the air to put those trusses on. And we had crew to do that. So managing not only the material supply, but also the crew through that and working with them hand in hand on a daily basis.
Being able to stay on schedule. I know budgets became tough as basically the price of the products improved or increased, but
Right,
manage what you can, keep a hold of what's in front of you,
right,
keep the process moving as streamlined as possible, whether it's working with the lenders to make sure everybody's getting paid or making sure that everybody's.
right.
So all those little pieces that you got to ensure everything is as smooth as it possibly can.
Did for sure. Thank you.
Yeah, of course not. I gotta appreciate the work you put in there because that's not
Yeah.
easy, especially trying to build a smart home all the way back in
Right.
2000.
Yeah. Put in smart electronics, had it hardwired for Ethernet. Um, the current actually as close to the current standard as where I saw it going to put all that in place because it was designed to be a smart house.
That's that forward thinking idea. Know about where you want to go, not just what's possible for today. It's all
Right.
about how else can you be prepared and have a home that's geared towards the future.
Right. And that part of that was my tech background. So knowing what modern offices look like. So saying, let's put this in the house so we can use it. Anybody in the future can have what they need for technology.
You mentioned some of the other improvements you guys made was also adding a home theater in the.
Right. At a home theater, that was an interesting piece of that, putting seats about 20 people. It's a big home theater, right? In the projection equipment, the surround sound, designing what the screen would be, actually constructing the inside of the room with there was this foam material we put between the drywall and the studs to help the vibration, so the vibration didn't wake everybody else in the house. And yeah, the other thing we did on the house was spray foam insulation with the inside the steel walls before the drywall went up, put that spray foam, which is very popular today, but wasn't as popular back then. So that created more energy efficiency in the house as well.
Gotcha. So there's a lot of kind of just little details that you were looking ahead to, or they're just thinking of how can you improve it, make it more conducive for living, or just improve whether it's just the emission side of things, but always
Right.
thinking a big picture of just the energy savings, cost savings, and
Right.
then making it as futuristic as you possibly could for what the time allowed.
Exactly.
Those are key. Those are key. And then now the final piece that you guys added on, you mentioned, we spoke about was the garage you said you added.
Right. Right.
Then what you put in to fill up the garage. Can you tell us a little bit about that?
Yeah. The garage itself was 2,200 square feet. It's three double doors, and it was tall enough to. Actually, it was the flooring was designed to actually support a fire truck. Yeah, it was like that because there was a possibility of a fire truck being in the collection, but mostly it was Studebakers and Jaguars. So we started with a 1955 Studebaker Speedster, had a 1962 Studebaker Gran Turismo Hawk, a 1939 Studebaker President. Of the Studebaker cars, for those that don't know, go take a look at what a Studebaker is. They were around for a long time, but they went out of business. Yeah, so the family that ran it, but they started with what we call a Conestoga wagons. They were wagon manufacturers that went into automobiles, and through the 60s, they survived through the mid 60s and then kind of went out. But they were cool cars, fun cars to play with. And then had a few Jaguars, coupe, convertible, and a couple of sedans that were actually by the time I owned them, my daily driver was an antique. It was over 25 years old. But fun toys for the time.
No, understandably, it's like had to go take a look at them, and I'm not gonna lie, those they're beautiful classics. Like you said, the kinds that you see at a parade, and you just want to stare at them and be like, I just want one of those. Let me just get one.
Exactly.
So no, I see the appeal to it, and I can imagine the garage is looking absolutely sparkling, having all of that collection in there.
Right. The actually it was interesting in the garage. It was spray foam insulated too, heated and conditioned, and had actually had a lift in there. So I stacked two cars, one under the other for parking, but it made it easier to work on if you were
Yeah,
working.
get under the hood a lot easier.
Yeah, yeah. Well, or underneath when you're working on something.
Yeah, yeah. That's
So
ingenious.
yeah,
You really had the foresight of how many cars you're gonna need a lot of room. It's possible once again. Yeah, that speaks to a lot of foresight in there. Yeah, yeah.
Right,
I think my first part of the car collection of you guys, your car history, is when you mentioned the Jaguar XKE, talking
right.
about the tire pressure for having
Oh,
to.
right, right. Yeah, the first XKE I drove had the manual said if if you're driving several hours over 120 miles an hour, tire pressure needs to be at a higher tire pressure than normal daily driving. So it's crazy. These cars back in the 70s, right? It was actually it was a 72 XKE V12. That was a fun car to drive.
That's raw power right there.
Yeah,
But just
yeah, lots of
going
fun.
at 120 for a while.
Not in the US. It was
No,
definitely not a US
not
thing.
at all. Over 100, they're on you.
Right,
But that tells you about, I'd say definitely the times the culture was designed for to
right.
use up some beautiful cars. And we're looking at them left, right, and just like auctions and just like would be nice. Would be
Yeah,
nice. to get one of those.
fun hobby for sure.
Absolutely, absolutely. No, it definitely inspired me. I'm like, I need to start thinking about car collectibles and such like that too. So just all of a sudden I'm like, I can get more into cars now. I'm looking at these. So
Right.
yeah, definitely inspired me too.
Nice.
Uh, so now I want to take that on and like we spoke about that kind of spoke to your intro into real estate and then like you mentioned you're previously in IT and then you then made that progression into the mortgage side. So can you tell us about that? How did you make that transition? Who were you working with at that time and what was it like?
So back then there was no licensing. It was easy. I just went. The first company I worked for was a small brokerage firm, a husband and wife's team. They'd been bankers, worked inside a bank, and they started their own firm. So went to them, learned. It was interesting because it was all paper back then. So you had to collect all these documents in paper, make copies of them, put them in a file, send that file to the processor to look at, and then that file went to underwriting in paper. So I transitioned from all that paper into scanning documents into a system, uploading them so that we got into a more electronic age with that. It was a big change, but we went through that whole technology change too, where we weren't faxing things around anymore to scanning things in, having them on a platform that people could read on their screen, the documentation that needed to support underwriting to what we have today, which is a lot different, where people do an application, AI is looking at the application, going through what they do. People can electronically connect their payroll system, their banking system, their investment account system, pulls it all in, and almost by the time they're done, we've got an underwriting decision if the file's not too complicated. So if somebody's a W-2 employee today and they're willing to link their stuff through the banking security, by the time they finish their application, we've got an approval done. It's somebody like one of my clients today that owns 23 real estate investment properties. It takes longer.
So all of those.
So we're from first-time home buyers to sophisticated investors. But yeah, like you said, the transition going from a paper-based file to everything being electronic. So it's a transition the industry's gone through. So yeah.
I want to try to get that just to basically better visualize and put some numbers behind it. How long did it typically take when you had to basically fax paper to the
Right.
underwriter, get it back, and then go. What was that usually? What was the decision time during that period like, or how long would that typically take?
It was like first you got to meet with the client in person. They have to bring you all of their paperwork, right? You have to make copies of everything, get them in the file. And then once you've got that all, oh, and then the other thing was you had physical paper rate sheets, right? That you looked up, all the criteria related to the program that you wanted the client to go to that you thought was best for them. And picked that out and then got that decided on. So put all that paper together and then physically had to turn it into a person who then took it, made sure everything was in there, double checked you, and then got it into underwriting. And that could take several days, right? Overnight mail, FedEx, whatever we were using, right? And then getting it to the person that was underwriting it, and then back and forth. So that process, that initial process, took at least 3 or 4 days because you had to get everything together. Versus now, like I said, almost within that 20-minute period of putting an application in a system, having a decision. Yeah, yeah. Automated underwriting runs automatically in the background. And once they've got everything in the system. So yeah, huge time savings in terms of what it takes and what somebody can have a decision on.
All right, so not just even just saving you on the time too, it's also just being giving them the chance to get that information a lot quicker. You also mentioned that there's some other additional benefits too. It like takes away the need for all that paperwork, no need for fax information back and forth. Everything is digitally stored. You can get through that process with ease. And
Right,
then for safety as well, I mentioned there are also some other avenues where it can give you guys some comfort and peace of mind in
right.
case any doctored information or any paperwork like that that you're unsure of, the AI is able to at least pre-scan it, kind of give you some insights like, hey, maybe you look out for this, look out for that,
Right, exactly.
guide kind of the results, like what's possible, what loan options are available to them based on what they've provided as well.
Right. Right. Yeah. So we get once all that information is in the system, their income, their assets, it pulls their credit. We can look at that, click a button, and it gives me all the loan options with rate variations that I can pick for a client. Go through multiple investors and see what criteria, especially if it's a first time home buyer and they qualify for first time home buyer programs. It prompts and shows those. So I can say, I get a benefit for this client right there, not having to like have it all necessarily up in my head. I need to know about it, but uh, the system helps process that a whole lot faster.
Right. So it gives you a great visibility. You can give them a lot more information than typically you'd be able to, instead of having to, let me get back to you right there in front of you, everything's lit out, and then they get all that information that they need right away.
Right.
Everything's available to them, what's possible, then how best they can use that information going forward as well.
Exactly.
But like you started talking about retail, so I think that's a good segue I want to take on and then kind of speak to that. Since you started to what you say modern day you've been experiencing in the business now, how have rates kind of developed and what would you say has been an impact to it?
So rates historically over time have changed with the market. We had like prior to 2000, we were in the like sixes for an average interest rate. We'd gone higher, we'd gone lower, especially after the market crash in '08. It'd gone quite a bit higher. So we've had variations with the Fed buying mortgage-backed securities during the COVID period. We had really low interest rates. So the government intervention created this artificially low, not market-based mortgage rate situation. So a lot of people took advantage of those rates during that period of time. And now we're back in kind of a market-based environment. So we're seeing government loans around the sixes and the low sevens for conventional loans right now. And it's just a sign of what the market will do and adjust to when it's not quite as manipulated by the government as we have.
So it's like saying it goes by a cyclical nature based on the economical factors of the times.
Right.
So in these highs before, then we had the crash. Now they're cycling back up again. Obviously, post-COVID era it gives
Right.
us new rates to follow and sort of a new aspect of it. And then so it kind of also just builds around that for what's the demand of the time as well, and how does that then impact what the rate is, or at least how does that impact what the economical standards are? And I guess I'd say based on how we can frame and shape it to avoid things like maybe the inflation or cause a consumer crash in per home.
Right, right. So we've had, I mean, all kinds of things. There's a supply and demand situation going on where the current generation of home household formers are the children of the baby boomers, which was the largest generation of homeowners. Now this other huge population has come in, and I think that population trend is through like 28, 29. So there's still going to be this huge demand for people wanting to form households in the United States. And that's the demand side. And then we've got the supply side where builders had quit building houses for quite a long time. After 2008, they started ramping up slowly, uh, and but not enough to keep up with the actual population demand that we need. So there's a situation where you've got now multi-generational households uh, versus the standard quote nuclear family of just mom, dad, a couple of kids, or however the household is formed, where it's adults and just one generation. You got two, sometimes three generations in a household. I've got my mother's living with me, so we've got a multi-generational household as well. So there's a lot of dynamics economically and statistically showing us where the supply and demand is. And then back to the interest rate situation where people that refinanced when the rates were really low don't want to move and have a higher payment for something that may not be as big as what they're living in now, right? They may have a larger house than their need because their kids are all moved out. So there's that going on.
You're sitting on a 2%, 3% mortgage. Nothing is gonna make you want to jump into a six or
Right, exactly.
less room. You're like, yeah, I think I'm fine here. And typically that would create the supplies when most people would move up into a new home
Right.
and the houses come available. But now we're not seeing that move up buyer. And so all of a sudden, like you said, everyone's just staying put. And then it's just bringing more family to where they already are managing that space or at least making the most of it that they can. Maybe eventually down the line, they might feel compelled to make a movie. Maybe, okay, the space all of a sudden doesn't fit or the location isn't ideal for them anymore for one reason or the other. But to the
Right.
best of their ability, even maybe longer than they typically would have held on. Now they're just looking at the interest rate and saying, no, there's nothing out there for me. It doesn't make sense to let go. And so that kind of strains what would it be in the supply, even if the demand kind of fluctuates up and
Right. Right. Exactly the situation we're in. So it's going to be interesting to see. I mean, there's new construction, a lot of new construction going on around Atlanta. So there's builders, but they're not the same. I mean, it's crazy that you look at new constructions that start at 300, 400, 500, depending on the area. I mean, if you're far out. If you're closer in, new construction is starting at, you're going to pay way higher than that. So very different from when I moved in, and we were still sub 200 in new construction. It was like a big difference, but the economy's run to that. So yeah.
See, that would be a dream market. Might cause a crash, but that would be a dream market to walk it. Prices are what people would deem affordable once again, because
Right.
unfortunately the income doesn't grow as fast as the cost of living does. And
That's
so there's that disparity that we continually face.
right. Right. Yeah. Income hasn't kept up with what the change in cost of housing has increased by. Uh,
You know,
People try and make it work, or you form households that make it work, right? Then you go in. That's another reason you maybe have a multi-generational household or have accessory dwelling units like we were talking about. There, somebody could have a rental income coming into the household in the same property to help offset their mortgage expense.
so that's definitely somewhere we can pick up next time before we get to the top of the hour and run out of time. Thank you so much for coming on. Thank you for sharing some insight, sharing your background, and look forward to chatting with you on the next episode.
Thanks, Balaji.
Pleasure. Have a good
Take care.
one.